Hey there, traders. What's going on? Jamie Setley here. It is 2/20/2020 and Thursday, 5 p.m. in New York. And before I, start babbling about charts, would you let me know that you can hear me and that you can see the screen? Just give me a little confirmation. Test, test, test. Can you guys hear me? Can you see the screen? Let me know. Okay, says Ted. Ted, welcome. I haven't seen you around, so believe that you are new here. So welcome. And how this works is I'll run through mostly the big charts that I'm paying attention to right now. But, for the most part, we'll go through FX, equities, some commodities. If there's something interesting, that's random, we'll look at that too. But then, feel free to ask anything really, whether it's about, a certain market or strategy or an indicator or whatever, or a technique. Just, it's pretty open here. All right, so DXY, this was in yesterday's post. Again, to me, so another update today. Sentiment is kind of getting off the charts. Euro, for example, DSI was 7 on Friday, last Friday, okay, and we've gone lower since then. So yeah, in fact, the 5-day average of DSI, I believe, was like 8 something, which is the lowest in 4 years. So my thinking on this still is probably, a top somewhere around 10050, so 100 spot 50. The main thing being this line, right? Cuts through a lot of really big pivots, okay? So that's where we're looking. And if we were to get a drop, you can see yesterday I was noting kind of in DXY and in Euro, we were talking about maybe getting a 4th wave drop. So if you drop from here, I would kind of look at this area as support around 98.85. You can see kind of the 1, 2, 3, right? And 4, 5. I'm not saying that we have to go to 90.85. I'm just saying it's a pretty clean spot, right? A clear level to go to. Once we do start to get some weakness, then we'll figure it out. There's really no need to guess on it, but just kind of, outlining where I think support would be. All right. Okay. Euro is going to be the opposite situation, of course. This is what we were looking at again, the long-term parallel. Love this thing. It's actually drawn off of, you can see the lines actually drawn off of the low here from November 2018 and then September 2019. But if you extend it back in time to the left, you can see how many major levels that we cross. And I just love it, including the all-time high back near 160, which was in 2008. And again, this one, we're looking here for probably a 4th wave pop, right? I guess 108.80 is your level. That's the former low. And finally, the big level to pay attention to is going to be 107.25. Again, huge spot. You got the gap and that trend line down there, and sentiment obviously is ripe for some sort of a turn, compatible with late stages of a drop. All right. Okay. Cable has been quite a pain in the rear end of late. After we had this big rally, to me, this was impulsive and it was 5 waves up, meaning that we should have held that low. It did not. You can see that the 200 period average on the 4-hour charts continued to act as pretty solid resistance. From here, a couple levels that I'd pay attention to, probably, hold on, see those lows over there? That's going to be, lows from November, late November. That's going to be 128.24. It's also the center line of the channel here. So that's where I'd be looking for a bounce, call it just below 28.24. I would then be looking for resistance probably back on this 25 line. You can see that was support, right, a couple days ago. I believe that was actually on Tuesday, and that resistance is going to be up probably near 29.50 or so. All right, so you've got two levels to pay attention to for cable: 28.24 and 29.50. At this point, you would think that this is more of a downtrend that you want to be selling with. Ultimately, we will be on the lookout for some sort of a higher low, but against these lows way over here, but that's much longer term in nature, of course, and we're probably going to be looking towards the bottom of the channel at some point anyway. And this could all happen over the course of really the next couple of weeks. I mention that because if I bring in the seasonality charts, right? Seasonality is simply a market's tendency to trade a certain way throughout the year. You can see that March and April are historically pretty bearish for the dollar. So, seasonally, we are in the strong dollar period. Probably should have respected that a little more, but we haven't had much of a, at least from my vantage point, an opportunity to get into these, these trades because it's just been such a one-way train. But the seasonal top for the dollar is on 3/6. So March 6th, the week of March 6th. If I go to cable, you can obviously see that the seasonal low is going to be the week of March 6th. So we are trading right in line with seasonality, actually to the week. You actually had a bounce week last week, and now we're back down this week, right? Aussie, March 6th is when we get to a very bullish period through April for the Australian dollar. We get to a very bullish period throughout March and April for the New Zealand dollar as well. So we're getting into the, the part of the year where you kind of want to start paying a bit of attention, to these seasonals, right? Some seasonal periods are stronger than others. Late February, early March is a very strong turning point seasonally for the dollar. So I'd pay close attention to that. All right. Okay. So we've gone through that. That was a bit of a detour from what we were looking at, but got those levels laid out. Let's go to Aussie and Kiwi real quick. Just a quick point. Obviously, the Australian dollar is below the lows from last year. Kiwi dollar is still not, right? We're still above the lows from last year. So we do have that non-confirmation currently in place. And that's in place as long as Kiwi is above the 2019 low. From here, just looking at the decline in the Australian dollar from 12/31, right? We opened the year, we've been down ever since. There is, so if we count this out as wave, hold on. Oh, I did not have that drawn correctly. All right. I'll have to change that. All right, well, whoops, so no big deal. So call it 65.70 is where wave 5, right, which is from here, would equal wave 1. In Elliott, wave 1 and wave 5 are often equal. So the fact that it's also the bottom of the channel here is promising. So I'd be looking for support probably around 65.70, formation of a low, basically be on reversal kind of alert in the Australian dollar near 65.70. Kiwi dollar, the level that you're actually looking at here is more like 63.15. It's actually pretty soon. So I'd be paying attention to that level. You could also take out this low here from November and then turn up. The 63.16 is where wave 5 would equal wave 1. It's also weekly, what we call weekly reversal support. And again, what's that? But especially explain this to Ted because he's new. But if I pull up, let's just pull up a Kiwi dollar weekly chart here. Okay. All right, so weekly reversal support or weekly reversal resistance, you take the low week of the move, right? Well, where would be the low week be? The low week was right there, right? That is the level that we're looking for resistance or support at. The idea being that when you have a big reversal week like you had down here, the interests at that level are powerful and strong, and they're going to want to defend it. So you look for support at the close of the week or the day of the low bar or the high bar. Okay. Where were we? Okay, so there we go. So that's what we're looking at with with Kiwi. Also, Ted, and anybody else for that matter, when you go to the website, if you're logged in, go to resources, and you'll see stuff about this, right? So like here is reversal support, reversal resistance. You know, and I give examples for, you know, of what's going on here with these things. So that's something, you know, that you want to check out as well, probably, because it will help understand some of the lingo and some of the things that we're talking about in our reports. We forgot to look at a very important chart when I was going over euro and stuff, and that is dollar SEK. So Ted says where to start, and just, you know, just kind of go through it. I mean, I know, yes, it is a lot of info, but there's a lot certainly to go through. But, you know, just I would probably the more important stuff to really follow is first. So like median line analysis is extremely important. Because we do a lot of it, right? It's a trend line method, but we do a lot of that. So I would start there. Year, month, week opens, we talk a lot about that as well. So maybe just go down this list in that order. All right, so here is the dollar Swedish krona. I was writing today's report earlier, and I said if there is such thing as resistance, then you would think this is it. So like you have the underside of the wedge line, you have the upper parallel of a fork, you have a short-term channel line, right? And you have pulled off of it. You know, so you have reacted slightly, but nothing to write home about just yet. So basically at this point, just kind of monitoring the short-term picture to see if, you know, we have, you know, something to trade against this high. What I mean by that is you're going to want to see like a short-term drop in an impulsive fashion. So, you know, if you were to get something like this, right? Something like that. Doesn't have to be that low, but you get what I'm saying. And then get a little rally back, and then we want to be shorting that, okay? In fact, it would probably be, so this is a good example actually here, Ted, to show you how we would want to trade this if we got some weakness. So let's just say that we have a channel here, and we will just get rid of that. Okay. So you see this center line here, that's the center channel line, okay? You see how it's been support and resistance at times. So you can kind of, you know, envision this actually ending up as your kind of like your level that you would trade into. So let's say that you dropped into it, you came back, that's where you would want to see resistance, right? On that center line, because that center line has been support resistance before, so you can trade into it with confidence, right? With a relatively tight stop. This is, again, hypothetical. We don't know what's going to happen, but this is something that I'm kind of watching for, or what I look for. So that is a good example to show with dollar Swedish krona. All right, let's move on to dollar yen. So dollar yen, go to yesterday, we talked about maybe getting a pullback at some point, and we did not get a pullback at all. Trying to go to a 4-hour chart here. Okay, so here is your channel. Now we are looking at a channel from the August low, right? You've got the set, or the April, excuse me, April 2019 high up here at 112.40. So that is more or less in line with this channel. My thinking is that you kind of I'd look for this to take this out, and then I'd be kind of on reversal alert. So, obviously, a stop run, what have you, and then see if you can get a pullback after that. All else being equal, and you're just trading this channel, if we do get some reversal evidence, then you could be looking back towards maybe 110.70. All right. Now, I mentioned in today's report, which is right here. I haven't published it yet, but there's a line that I'm not seeing a lot of people talk about, and that's actually this line off of the 2015 highs, right? Now, we would call that, right? We would call that your original slope. It's the first two, the first two lows, the first two lows or highs within the sequence, and these are the first two lows. So really, that's the trend line that you want to pay attention to, and we're right there. So what I was saying in today's report is let's see what we do on a weekly basis, okay? Let's see if this is a false breakthrough here. If we close above here on a weekly basis, okay, fine, I'll call it a breakout, and maybe we want to be looking at buying a pullback into this level at some point. If, however, we end up taking this out and fail hard on a Friday and you're at below, then you have a false breakout or a failed breakout, which actually could be a trigger in the other direction. So notice how I'm talking here. I'm not talking like I know the market's going up or down. I'm kind of saying if then statements, right? I'm saying if this happens, I want to do that. If this happens, I want to do that. So let's see what happens on that instance. And something else I found somewhat interesting. So the fact that gold, right, gold and yen tend to move together over longer periods of time. That obviously has not been the case here recently, right, because yen's been going down and gold's been going up. So what I'm going to show you, and I don't know why I didn't save this chart, but so I'll just have to recreate it again. But let's take a look at dollar yen. All right, so here's dollar yen. Okay. Here's a daily chart. Okay. And then I'm going to put in a gold chart. Just going to do GLD, just easier, whatever. Okay. Okay. What I'm going to show you is when gold and dollar yen make 50-day highs together. I just run, when I'm doing highs and lows and stuff, I do 50, it's just easy. 50 weeks is like a year, roughly. 50 days, not quite 3 months, but whatever. It just works, I don't know. So if we look at this closed, all right, so close equals highest, close 50, and close data 2 equals highest, close data 2, 50. All right. Okay, so you can see here dollar yen, we're going to have magenta dots for when you get a 50-day high in yen or dollar yen, excuse me, and gold, or in this case, GLD. All right, hasn't happened since back here in 2012. At that point, we continued to go on a run, so it was not any sort of a turn. It did happen back in April 2011, which I think was after the big earthquake, which was down here somewhere, March 2011. Or sorry, was it either the earthquake or, yeah, the earthquake and the Fukushima disaster, whatever. That actually ended up being a top in dollar yen. You had one in 09, which was nothing. It's funny enough, it actually was the exact same day, February 19th of 2009, and it happened yesterday, February 19th of 2020. And then the other time it happened was during the run up in 05 and actually at the high in 05. So I don't know, there is precedent for us having a turn with these conditions in place, with having both 50 days highs in gold and dollar yen. Right? It's just kind of an anomaly because it usually doesn't happen. All right, so there we are with that. Dollar CAD, I'm really not sure. This has been a pain in the ass. You know, we were thinking we held the over here, right? We held the month open all last week, and then we got long, and then we got stopped out, and then we reversed again today. So frankly, I'm not sure, and I'm probably not going to be looking at dollar CAD until either we start to, you know, look like we're going to go for a run into 134, which is the trend line back to the 2018 high, or we break through the short-term trend line and we can trade from the short side, because it's tricky, right? Like, you've got pretty good resistance up here. You know, there has been just, you know, decent resistance up around, you know, 133 to 134 over the last, you know, number of years. And we're trading off of it, so it's tough to buy into this on a near-term basis. So I'm just going to kind of sit tight here. Okay, we looked at some of these charts yesterday, like CAD yen, very interesting. I would pay close attention to the area up around 85.20. You could get a pullback from there, and if you do, then we would be looking at that 83.55, 83.60 area for support. Noted that in yesterday's post. Oh, and Ted, also, this should help you as well. So, like, if you are, whenever you're at the site, right? If you ever one of my articles, okay, the swing updates, up here, you can just click on swing trades, and that will take you to the page that has all of the updates, okay, and all the archived webinars and everything. And what's easy is, like, if you want to find analysis for something specific, just go to this, hit Control F so you can find. Let's say that you want to read about euro dollar, okay, euro dollar. Right? It'll tell all the times that euro has been written about, right? So yesterday, before that, it was the webinar from last week. Before that, it was the 13th. You can see all this stuff. So very simple and easy to find, or so I think. But all right, so there's that. Euro yen. You can see kind of the common theme with this is that, like, we're kind of starting to think, you know, pull back in some of these yen crosses soon. You know, take out 112.40, pull back, right? Dollar yen. You know, take out that 85.20 area in CAD yen, the high from last year, and then pull back, right? Euro yen. Good level up here for, you know, pullback as well, relatively soon. 120, 150, let's call it. If you do get back up there, you can see this channel from the 2018 high as well, right? Look at this magenta parallel. So I'm going to make it magenta, and right, look at all the failures that we had up here. Okay, look at all the failures that we had up here. Take it through here, but watch that level. It's 120, 150. It's right in line with over here as well. The highs from last October, November, or October, excuse me. And then we will be looking for support probably somewhere down here. I do want to go to a 60-minute chart here and see what the pattern looks like, actually. And I would call this an impulse, would you not? Right? So 1, 2, 3, 4, 5. Whether or not you get one more spike up into that is unclear to me, but oops. But yeah, 119.60 is going to be the 618, and 119.80 roughly is going to be kind of a big area that's been big for a while. And the lower end of that zone is going to be intersecting with this line over the next, basically Monday. So I don't know, that's where I'd look. So 2 levels to trade, right? Basically up here, if you get one more pop, and then somewhere down here. So 120, 150, 119.80 are your levels to trade euro yen. All right. Okay, let's take a look at indices real quick. And then we can look at some commodities as well. And then if you have questions on anything, we can do that too. So here are the charts that I have in today's report. I have some indice reports or charts. So this is the channel from 2000 in 2008, 2009, the entire run up over the last 12 years. And you can see that the February 2011 high, right? That channel line is where we're at now. So we've come into that line. This is a level where we have, certainly retraced off of, and sometimes had some pretty big drops. I do write in today's post, it's unclear to me if this, so if I look at like 10-minute chart here, it's unclear to me how this plays because the drop so far, excuse me, is not impulsive, right? It's not a 5-wave drop. It could turn into one, doesn't really matter, but yeah, it's not extremely clear. My point is, if we do follow through on today's weakness, I'd be looking for 92.87 as a first level. That's the high over here from Jan 24. It's also going to be the line off of the lows from December as well as January. Okay, so that's your first level. But bottom line is, I mean, you're at really long-term resistance up here. Okay. All right, let's take a look at the S&P. Somewhat similar. I actually like the NASDAQ chart better, but this is a Schiff fork, okay, off of the 2009 low. Look at the red line, okay, and see how many levels that crosses for long-term resistance, right? It really starts back in December of 2013, okay, March 2014, got above it for a while. After that, though, look what happened in 2018, February, March, September, and we've been trading up on it for 1, 2, 3, 4, 5 days. Clean level here is going to be a 50-day average and line from October, and that's going to be down, near 32.70, 32.80. So below there, you can say that we've really broken and done some damage, but that's where my focus is in the near term. All right, let's go to crude oil. So crude, we got bullish down here, and it's worked out. You are getting into a level though where, I'd call it kind of the bottom of a resistance zone, and that resistance zone is really going to span pretty much where today's high is up to like 56 or something. If I pull up, okay, so here's my futures with volume chart. This is volume weighted average price, right, from the high. The thick one is going to be, the thick bold line is always going to be the annual volume weighted average price, right? But we've hit resistance based on volume weighted average price from the high, okay? So the point being is that you could pull back. I would watch for support, essentially this line off of these levels here called neckline, right? So that's going to be somewhere around 52.80. If that doesn't hold, then volume weighted average price from the low comes in, which you can see actually held for your liftoff here back 2 days ago. Silver breakout, look towards this level. As I mentioned yesterday, it's going to be 1860. That's a level where you could pause and pull back from. Other than that, I'm constructive on the metals. It might be getting a little ahead of themselves. DSI is getting up there, but at this point, looking for nothing more than just a pullback. Let's go to gold. I still think that the next big level on the upside is going to be this long-term chart around 1735. If you do get a pullback, I would be thinking that support at this point is probably going to be like 1590 or so. We'll be keeping an eye on the VWAPs on this too. Okay. You can see like where all the volume is over here. That is going to be 1590s. So, probably don't want to chase gold up here. I wouldn't think, but watch silver for resistance, basically. So 1860 for resistance. We'll look to identify support as we start to moderate a little bit or come off some, okay? And what else we got? That's going to be pretty much it for today as far as what I've got to share. Are there any questions? Any questions at all? Nothing? If we got nothing, then I'm going to wrap it up, and I want to, oh, there's Patrick with the DAX. Always the DAX. I always forget. Okay, DAX. So this is the one. Let's see. Kind of tough here. Because like unlike the S&P and the NASDAQ, I've got those channels. I would kind of draw, so that high from back here, which is Jan 2018, that's like 13,600, about 13,600. I would, if you dropped under there, that to me would be kind of important, right? You can see here, just looking at the chart, you know, like below there would, to me, would be, you know, reason or argument for a deeper decline. And at that point on a trading basis, you'd be, you know, taking some off at levels probably like 13,400, right? Something down here, right here. So watch 13.6. You get below 13.6, I'm kind of near term bearish until 13.4, and then we'll see, you know, but at this point you're just going on level stuff because, you know, it's not like there's a clean pattern here where you're gonna, you know, say that this is a head and shoulders top or whatever. There's just nothing there yet, right? At this point, we're just following the channel. So would still give it room for the top of the channel unless you drop below 13.6. Yeah, Patrick, thank you, man. You have a good one too. All right, everyone have a good one. Have a great rest of your evening, day, morning, wherever you are in the world, and a great rest of your week. And I'll talk to you guys later. All right, take care.